Welcome to the CLS Monthly Market Review. This month I have with me Grant Engelbart. Welcome, Grant.
Thanks, Rusty.
How's it going?
Thanks for having me.
Yeah,
It's going well. The things have been going a little better in the markets. We started to see some stabilization mid-month.
Yeah.
What do you think about that?
Well, I think the markets are always interesting, and we are recording this a few days before month end. But I think the one thing that stands out, as you know, because you follow all these sentiment indicators, but sentiment hasn't been great. But you know what? The stock market's up, the bond market's up. There's some segments down, like maybe some growth stocks like healthcare and the developed internationals down. Emerging markets are up. But really, it's been a pretty decent month. And I think the one thing, there's a story out there, though, kind of talking about the stock market is going the same direction as oil prices. If oil prices are up, stocks are up, and vice versa. I don't know. I think it's a little sloppier connection, but you're the commodity expert. What do you think about commodities and oil right now?
Sure. Well, that is true. I mean, correlations between stocks and oil prices have crept up a little bit, but I don't think it's anything to worry about, especially with oil prices at as low levels as they are. People will feel better if their stock prices rise, even if prices at the pump are rising as well. Yeah. And it's important to think that gasoline is traded separately from oil. But in general, in commodities, we're starting to see stabilization there. Some parts of commodities like precious metals have really started to do well. And we're starting to see kind of energy markets come alongside of that. What we try to emphasize at CLS in the commodity space is there's so many ways to play commodities that we want to utilize the best methods of doing so.
Right.
There's a lot of things to think about, costs, including implicit and explicit roll costs, contango versus backwardated markets. So we use a lot of ETFs that focus, they're kind of smart beta in the commodity space as well, that focus on minimizing those costs and also diversifying portfolios. And we also like to look at using both commodity producers and the equity side and the commodity futures themselves.
Absolutely. So 2 questions, of course. So the first question is, what are the expected returns like for commodities now? They've been hammered.
They have, and they're a lot higher than they have been in the past as a result of lower prices. Yeah. But also we have lower inflation expectations. So if inflation surprises the upside, you see commodity markets generally react positively to that as well. Yeah. So higher expected.
Well, at CLS, risk budgeting is what we do. We're risk managers first. So the second question, a more important question, what about the risk reduction that you can get from commodities? Is it still in place?
It definitely is. So the longer-term correlation between commodities and the stock market is really around 0.5. So that's a significant level of diversification benefit from adding commodities to your portfolio. And some people think that commodity producing stocks, like your big energy companies and things like that, are very correlated with commodities themselves, but they're not that correlated. They're about 0.75 or so as far as correlation. So there's still a benefit from using both of those in a portfolio, and we've seen success doing that.
Right on. Actually, in this month's market review, the commentary, what you're talking about, I riff on it too. I'm talking about, people are saying diversification doesn't work as well as it once did, and it's just wrong. I mean, we've heard it about international stocks in recent years. We've heard it about commodities recently. We've heard it, or I've even heard it about fixed income lately. And the thing is, diversification is working because really it's about risk reduction and managing risk. A lot of people think it's about return enhancement. It's really about the risk reduction, and that is the free lunch of investing, is diversifying portfolios, as you know. I mean, maybe the free lunch isn't as large, but diversification is still working.
That's right. Free lunch, whether large or small, is always a good thing.
I think so. I think it's about time for it too.
I think so too.
Great. Well, awesome. Well, thank you for your time today, and we will see you next month. Thank you.